Crypto is fundamentally flawed. That is the assessment of the world's central banks, according to a new report. Welcome to the Daily Forkast June the 27th, 2022. I'm Joel Flynn. The Bank of International Settlements has been warning about the global economy. Crypto concerns are near the center of that. But it says there are still big opportunities to come. So let's get you up to speed on that and everything else from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
There's more big warnings about what's to come for the global economy and for crypto. The Bank for International Settlements is sounding the alarm in a new report released Sunday. The BIS works for some of the world's central banks. It says there's more pain to come for leading economies. Inflation, of course, the key problem facing the world, it says, but crypto is causing consternation as well. Forkast's Lachlan Keller has more.
The report warns that there's no respite for the global economy, with the world facing the highest levels of inflation in 40 years. But it also delves into another consideration, the digital revolution sweeping the financial industry. And while acknowledging that crypto and blockchain have the capacity to improve existing systems, the BIS is keeping the crypto industry at arm's length, saying recent events support their thesis.
There are many issues of DeFi that we should take on board, should build on them, but at the same time, as part of this private-public partnership, the key pillars should rest on central bank money and the institutional capabilities of central bank.
BIS economic advisor Hyun-Sung Shin believes central banks can learn from what's happening in the DeFi space.
There are some technical features that we can certainly bring on board and integrate within the current framework. This idea of the peer-to-peer exchange, peer-to-peer transfer of value, we look into that. In fact, it's actually very well established that you can use distributed ledger technology to actually move CBDCs around. And the idea is very similar to how you would do it in crypto.
However, Shin went on to reiterate the report's claims that there are fundamental flaws which make crypto unsuitable as money.
It's always in search of a nominal anchor. Stablecoins are a very visible sign that they're always after the stable value, and they use all kinds of convoluted ways of getting this stable value. And if you like, what we say is, if central bank money didn't exist, crypto would want to invent them.
Shin said that isn't their biggest concern, however.
The biggest issue is that crypto just doesn't scale. There isn't this feature of the virtuous circle of greater use leading to greater acceptance, greater use leading to greater acceptance, which leads to greater use and so on. There is no feedback loop of this virtuous kind. It always goes the other way, where the more popular a platform is, it just tends to congestion, opening the door to alternative platforms, which leads to fragmentation.
Carsten told Forkast that the future monetary systems need to be built on a strong, credible unit of account, and that should be a central bank money, digital or not. For Forkast, I'm Lachlan Keller.
Markets, meanwhile, are watching the brewing battle over crypto bailouts. That is after Morgan Creek Digital this weekend moved to counter FTX's bailout of BlockFi. Citing a leaked investor call, CoinDesk said the asset manager is attempting to raise funds to buy a majority stake in BlockFi. The move follows FTX's offer to extend a $250 million revolving credit facility to BlockFi. Morgan Creek managing partner Mark Yusko reportedly said FTX's offer was the only one to not subordinate client assets. While that could be good news for depositors, it would mean FTX could buy BlockFi for essentially nothing. Meanwhile, US investment bank Goldman Sachs is reportedly looking to raise $2 billion to buy up assets from struggling crypto firm Celsius. According to Fortune, the deal would allow investors to acquire the troubled lender's resources at potentially large discounts. Celsius halted all withdrawals and transfers amid a liquidity crunch in mid-June. There is widespread speculation, of course, that it is at risk of insolvency. Citing unnamed sources, the report said Goldman is gauging the interest of Web3 crypto funds as well as traditional financial institutions. But potential buyers could still face big legal hurdles down the road. There is, of course, a lot going on right now in the crypto liquidity crunch. Make sure you head to Forkast.News for more details and more in general on what's happening there. Bitcoin managed to hold above $21,000 this weekend, Ethereum above 1,200. Expectations, of course, had been for a collapse of BTC prices below 20K. Though that hasn't happened, there are still big worries about the crypto bear market. So let's get more on what to expect from Annabelle Huang, managing partner of Amber Group. Annabelle, always a pleasure to have you with us.
Thanks for having me here.
Yeah, listen, according to DeFi Llama, total DeFi value is down significantly, $236 billion at the beginning of the year to just $73 billion now. What is behind this? Is it likely to continue?
Right, so the first reason is because obviously ETH to USD price has also fallen quite a bit. So in dollar terms, the total volume logged and a lot of the volume that's happening on chain has shrunk quite a bit. And just in pure Ethereum terms, a lot of the activities have died down just because of the liquidity crunch that happened over the market past the Celsius and Three Arrows news. Lenders are pulling credit both in the centralized finance space and also on the DeFi space on chain. So we've seen TVL from Aave and Curve all dropped quite a bit. And then there's some specific concerns around staked ETH. So we also see quite a bit of move there on Lido. So I think a lot of factors contributed to that fall. And we might be here for a while before we see a meaningful rebound, maybe something that's positive that happened within the DeFi space, say the merge. But that would be, that's still a few months away.
Yeah, I want to ask you about DAO governance as well. Solend DAO being talked about for taking over a big at-risk wallet. It may have ultimately saved their protocol, but some have said they're worried about the precedent it sets. Are you worried?
Well, it is a very controversial question, right? I personally think it would have been a terrible precedent if they hadn't reversed it, because that simply gave the DAO too much of power. So when it comes to governance, where is the line, right? Is the question here. I understand where they're coming from. They want to save the protocol. They don't want this liquidation to ruin the entire application. And I'm fully behind that. But I do think there are other solutions to that, as opposed to giving too much of emergency power to the DAO. And today they could be doing something for the good of the protocol, but another day, who knows? So I think this is also the beauty and the curse of having everything fully democratized and decentralized. So I'm glad to see that there has been further developments there, but I think it's also a good time for us to think about the governance power of the DAO.
We've also seen USDC's so-called flippening of Tether. Despite this, USDC's share is dropping. Is the stablecoin bear market going to continue? Do you see any bright spots for it?
Yeah, so it is interesting that USDC, even though it's much younger than Tether, its counterpart, I think in recent years and months has really caught up a lot in terms of market share. And I think that's also largely due to a lot of the institutional flows, especially US or Western market-based institutional flows coming to the market, where it's very easy for them to redeem and to create USDC. Which is, I think, highly regarded as the safer version of the safest version of stablecoins. But if you look at the volume traded, then you can see, right, I think it's still maybe a tenth of the Tether trading volume. We're actually working quite closely with the Circle and the Center team to see how best to integrate USDC in a lot of the trading platforms, exchanges, so that they can also be used as the denominated trading pair or margin. But it's interesting to see how fast they have caught up. But overall, the market share of stablecoins and crypto in general has fallen quite a bit. Going back to my earlier point, where people are pulling liquidity off the market, a lot of them actually put it off crypto.
All right, Annabelle, thanks as always.
Thank you.
All right, there is just 3 days to go until Forkast's next Crypto Rising live stream event, the future of stablecoins. Forecast's editor-in-chief Angie Lau will be joined by some of the top names in the space. They'll be talking about the race against time regulators are facing in the wake of the spectacular collapse of Terra Luna. You don't want to miss it. Make sure you sign up at Forkast.News and that you join us on June the 30th. The Metaverse is coming to your smartphone. Virtual gear and device maker HTC is expected to launch a phone with Web3 expansions tomorrow. The Taiwanese consumer electronics firm has been shifting focus towards VR gear with its latest model released in January last year, but in March, Chaoying Huang, the company's general manager for APAC, reportedly said HTC wasn't ditching the smartphone business. HTC still hasn't responded to Forecast's request for more details on the Metaverse phone, but we will bring you those when we get them. There is plenty more details on all of today's stories at our website, Forkast.News. Make sure you check out that. Do head to our Twitter as well for the latest updates on everything blockchain and Web3 at Forkast_News. That is it for today's Daily Forecast, though. From Asia to the world, I'm Forecast's Joel Flynn. I'll see you next time.